show, but I stopped doing it back in August. So at least the Alex Jones show is still on the air, so I could settle for the guest appearances.
Well, I know your show was popular, but you're a busy guy, so we want to welcome you on whenever you want to come on, or, you know, because your analysis is so needed. Thank you, Peter.
Yeah, but there's so much to discuss. I mean, you hit on a lot of topics there in the introduction, so I don't know necessarily where to stop. But just to say that I think as we ring in this new year, I think that there is a bigger disconnect right now between what people expect to happen, particularly in Wall Street, people that manage other people's money and economists. You know, I think there's a bigger disconnect now between what people expect to happen and what is going to happen than anything I've seen, I think, in my career, which is saying a lot because it certainly includes the dot-com bubble that burst in 2000 and the real estate bubble that burst and ushered in the financial crisis. I think people are more clueless today with respect to the true state of the U.S. economy and what is lying right around the corner than they were in 1999, in January 2000, rather, or January 2008.
Sure, there's that famous story of JFK's dad, the big stockbroker, Joseph Kennedy, and he says he dumped all his stock weeks before the crash when a shoeshine boy was telling him that the market would never go down and telling him what stocks to buy. Now, whether that story's true or not, I think it's indicative of the type of irrational exuberance, to use a Greenspanian type quote, that we see. 18,000 Dow. What's really behind this, and what are you saying is really coming versus the euphoria?
Yeah, you know, even Alan Greenspan is starting to come clean now. I guess now that he's getting closer to meeting his maker, he wants to get a few things off his chest. So he's starting to criticize the Federal Reserve, criticize quantitative easing. He's telling people that they should buy gold. It'd be great if you can get him as a guest on your show now that he's, you know, coming back from the dark side. You know, kind of like you know, Darth Vader. You know, coming back. But I think that the real disconnect here is that people actually believe that what the Fed has created is a legitimate economic recovery, and that because we have this real recovery, that the Fed no longer has to support the economy with quantitative easing or 0% interest rates, that we can normalize everything, no harm, no foul, and the U.S. economy is going to continue to grow. The reality is this is the Fed's biggest bubble ever, and I think it's ultimately going to be their swan song because it may well be the last bubble. This could be the bubble that finally breaks the dollar despite its recent rally and breaks the Fed and the confidence, the misplaced confidence that people have in the Fed, because they cannot end QE, they cannot raise interest rates without bringing on a financial crisis worse than the one that they caused in 2008. And I think for that reason, they will not do that. I think they are ready to queue up and launch QE4 to keep the economy from relapsing back into recession in 2015. And I think that's going to be a game changer for the markets, for the dollar, for commodities, for gold. And I think most people are not prepared, just like they weren't prepared in January of 2000 or January of 2008.
And you predicted both of those. How much bigger do you think this major correction or bottom will be, or will it be smaller than 2008?
Well, I think it's going to be bigger in the ramifications that it has for investors and for the standard of living of most Americans. I don't know that the stock market is going to be cut in half again the way it was in 2008 and 2000. It would be if the Federal Reserve doesn't launch QE4 and raises rates, then the carnage on Wall Street is going to be as bad, maybe even worse than 2008. But I think the Fed is not going to let that happen. I think the Fed this time realizes that this bubble is too big to pop, and they're going to do whatever they can to prevent it from popping. And so what they end up doing is sacrificing the dollar in order to prop up the stock market, the real estate market, the U.S. government. So I think the impact on the dollar, and the dollar lost a lot of value between 2000 and 2008. The dollar index went from 120 down to 70. It's now managed its way back up to about 91. A lot of those gains happened just in the last few months on all this false expectations. But I think the dollar index is going to decline even more this time around. So it's even more important for people to be prepared by being out of the dollar. You know, that's where the real damage is going to come, in the real purchasing power of your savings, of your investments. So people need to be cognizant now about being out of U.S. assets, foreign stocks, precious metals, commodities, things that will retain their value in this inflationary environment that we're going to be living through.
And that was my next question. I mean, I'm not an economist, but I just studied.
You know more than most economists.
Well,
That's
all